Afternoon, can I get a quick mic check? Thanks, JD, Leanne, Madames. Okay. September 11th, 2017, 12:01 p.m. I'm going to try and do as quick as possible a midday review. And this afternoon, I am going to take most of the afternoon off. So anybody from the oil room, I'm going to be rebooting the oil room right after. So it's good for the afternoon. And I'll set it so that if any of the alarms come up on the screen, it doesn't interfere. But I don't think I'm going to, well, we'll see. Like I can't say for sure. I'll see how the markets look after the midday review. But I think I'm going to take the afternoon down to get my the rest of my swings done. The markets are, in my opinion, in crazy town mode, and I got to tighten up on my trades. So yeah, anyway, the oil folks, I promised I would do a quick review with them first to get that anybody in and out that might be in the room that wanted to see my reasoning. I had a few DMs. So what we'll do is we'll go over there first. So this is the oil room. So what we have here is the oil dump from Friday on, as far as knowing I didn't trade it, but I had alerted it properly. So Epic's target hit on Friday, and I was alerting up to then. So that was in and around the hurricane landing where I am. And then, so I was alerting that, my short bias, and then target hit, and then boom, it dumped 3.5% or something. Then what happened was it landed. It's interesting where it stopped. So it stopped at the quad and then continued and stopped right at our support. So that was an ideal short opportunity. And then last night, an overnight trade, oil started to get a little jiggy. And I thought, well, let's take the trade long and see how it goes. So anybody that hasn't, by the way, watched the Epic videos on YouTube about how to use Epic and stuff, it's good to do, but there's reasons why things are getting more complicated than they have been. Like Epic, well, it's not Epic, it's oil. Oil with Epic was really easy to use at one time, not very long ago. But oil trade's getting more complicated. Anyway, so, and I'll explain it in a little more detail, but so it got down to our support. The supports are the gray horizontals, and there's always a yellow accompanying the grays, sometimes further apart, sometimes not. And sure enough, it got right into that zone, a little bit of a tail underneath, and then it started to go last night. So I took my long trade, and then I added right here because basically I was using the midline of the channel, right? So the up channel is, this is the top, the orange line, the bottom is this line, and I had a support here, and it was up over this horizontal resistance and support, and my mid channel line, so that's my runway, is right there. So as soon as I was up over, as soon as I was up over all my little tests, I took my 1/10. Then it was continuing, and I thought, well, my worst scenario is I'll come back to here. So I hit it again, thinking, well, we're going up channel. And so the idea was No, I was presuming we were going up channel. I mean, I thought worst scenario if we go down channel. This is my down channel resistance where it's trading right now. So I hit it here. It didn't go like I thought. Well, at minimum, I'm going to see down channel, and best, I'm going to see up channel up there. Resistance, right? This down channel resistance is here. Up channel resistance is up there. But that's not what happened. It sold off a bit, and I thought, well, typically what it'll do is an up channel, it'll, if I'm up over the midline, it'll stay up over the midline and then go again, right? So all of this wouldn't have happened. It would have just come back down to this dotted white line, the midline, and then continued up into my up channel. But that's not what happened. What happened was it sold off heavy here this morning, and I held through it all, simply because I knew that, the chances of it getting down below this was very slim. And then I thought, well, my worst scenario is the down channel wall, and then I'd wait for it to bounce into here and then dump it. But anyway, I got lucky and got a bounce after it had sold off and I had held. So there's a number of things I should have done. When I took that entry here, the second entry, and it started to come off, I sold right away, especially in these markets. And that's kind of the moral to the story of where I'm at with my trading as of this morning, because I've taken a few losses this morning. Well, for sure one in TVIX, but that's a whole other story. But that's still a result of trader bias, like this was. So, right now I got to cut quick in this market. That's the only way I'm gonna see a decent return and no loss. So I should have cut there after my second entry. I didn't. When it didn't hold here, I should have cut there. I didn't. When it failed here, I should have cut. When it failed here, I should have cut all the way down. But anyway, once you're in it, then you got to kind of put together plan B, and that's what I was doing on the way down. And then sure enough, I got the bounce, and I got lucky, and I got out even. Well, with some accounts, it depends. Some accounts I was in only the one entry. Some accounts I was in two entries. So I was either close to even or a little bit gain, but call it even. And now it's, come up to resistance on the down channel, right? This would be your midline on the down channel. Your support would be down over here. This would be your top resistance. So it's come up to resistance on the down channel, but it's held this support, and whenever it holds the algorithmic model wide support range like it has here, it's typically going back up channel at least until the next decision. And the next decision then, so this is your midline up channel, this is your top of the channel resistance, your bottom of the resistance, and by the way, something seems funky about the width of this, but anyway, it doesn't really matter. That's just a detail. So your next test is right here for down channel, if it in fact gets up into here, right? If it continues up this channel, the midline here. So top resistance would be there, bottom resistance would be there, but it isn't gotten through the test here yet. It still could be down channel. So it's important to watch the videos and get a feel for it. This is just a GPS, right? This is not going to tell you if it's going to go up or down. Nobody knows that. That's a fallacy. Nobody knows that. We've back tested anybody that's involved of any credibility, and whether or not they can intuitively tell you what's going to happen with oil and whether it's going to go up or down this channel right now, and nobody's predictable. It just can't be predicted. So you have to use the model properly. Now, you can also use, so going to chart, you can also use a conventional chart. So on your daily, pardon me, sorry. So this is an epic time to time, just to the public because it's a conventional chart. But it's got all the trend lines on it. Right now, this was the support of the trend line, and this is the resistance. So you can kind of line that resistance up with the epic chart and kind of figure out, what's going to happen. So 49.28 on US, on WTI, well, FX US oil WTI. So what is that number? 49.28. So on Epic's chart, yeah, that brings you up to the top of that next. So it's up channel, and it's to where that test is, up channel, the next test. So that you'll find that they coincide with each other, and that's how it should be traded. And that's why when oil got its bounce there, I shouldn't have sold really, because this is really where I'm working in the conventional chart. The problem is that the stock RSI is on its way down, so that's not good. And if you look at the MACD on the daily close, it's pinching, so it's really. Then look at your squeeze momentum. I mean, it's starting to flatline. And here's the main problem that I have with oil, and this is why many of the expert oil traders that I know are having a difficult time. It's starting to coil to the point of like no trade. That's not how oil, traditionally trades. That's not what we're used to. So with Epic, we're used to getting into at least many days or weeks of uptrend or downtrend, to the point where we could tell you Tuesday 4:30, Wednesday at 10:30, and Friday at 1 o'clock what the price of oil was going to be. Now it's getting tighter and tighter and tighter and tighter. So price discovery is disappearing very quickly. So like I posted right here. So anybody that tells you that they're having a heyday in oil is simply, it's not true. It's not possible. It's getting so tight, it's impossible to have a heyday. So you have to tighten down your trades, right? And this it's a whole other topic, volatility. Here's your whatever. This goes back to 2003. I mean, look at here. That uptrend lasted for 3-4 years. Then it came off for a year or whatever, fairly consistently. And then it went up for, 2.5, 3 years. Then it went down consistent. So you can draw straight lines, right? If you wanted to. And, in here it wasn't the best, but that's not even bad. Like if you think about the time frame, right? Like that's 6 months down or 8 months down, 6 or 8 months up, number of months. This is a nice line. That's a nice line. This is actually, there's a blip in there, but nice line. But these are months, right? Each. And then look at this. This is getting really, really tight. A lot of people would say, well, that looks a lot like this, but it doesn't. Once you get into it and you look close, it's not the same thing. What was happening in here gave us a lot more room. Now, sure, we had some areas in there, 2009, that got tight. But this is, you can basically draw a line straight. And it's getting tighter. So anyway, what that means is that you have to trade tighter. And the problem with that is that, so you can use your conventional chart too. So the quadrants on Epic's chart are very critical for your support and resistance, and you confirm on your conventional chart. But what the oil traders are doing is, the ones that aren't using Epic's charting that I know are using the 1 minute, literally the 1 minute. So instead of on the 15 or 30, they're on the 1. So, earlier today when this got a pop, and people started to call out numbers online, like on Twitter and stuff, they were calling out numbers that coincide with these MAs and that VWAP, because they're trading on the 1. And nobody thought, once it gets over VWAP, that it was going to keep going the way it did. I sold in here. Yeah. Everybody thought it would stop here. Like any decent oil trader I know, that was the top for the day they were calling. Well, it came off and then it went again. So it's doing really divergent things. Like for oil to do what it did here just on an intraday is crazy town. It doesn't look like it after the fact, but when you're in it, it was crazy town. It was not normal activity, not from a conventional charting perspective, and not from the model. Like where this buying started in here, that buying started completely on the model. It didn't start on a conventional chart. On a conventional chart, you couldn't have predicted those buys. They started at the bottom of that quadrant. But once it got hold, then it was, it's easier on a conventional chart to kind of confirm it all. But so anyway, there's a lot going on there. It's not, it's not beginner oil trading. So the moral of the story is to stay tight, to know where your MAs are, know where your VWAP is on your 1 minute. You can use this for confirmation, and use your wider view for like your trend line support and resistance, and then your epic chart, right, to confirm or to give you your real turns. But if you don't have those, you're not gonna make it. Like I know the best of the best oil traders getting chewed up because of the kind of stuff that's happening. So basically, that is the moral of the story on oil and what's going on. There's a question there. How would I have known to short when target was hit? Well, that's the thing, right? With all of it is it's all decision to decision. So going back to that epic chart real quick. Where did I put that? I got so much going on here today. Here we go. So, so you never know. That's the problem. And when you don't, or 2 or 3 at most right now, it makes it very difficult. Like, understand, we used to come from being able to say, okay, for a number of days, we're going to go up these channels. So like we'd have the top of the channel here, right? We'd have the bottom of the channel here. And we'd know either for days or weeks we were going up and this was our midline and it was really easy. We just long it, at the bottom of the channel and we short it at the top of the channel as it goes up and down the channel. And if you look at oil, that's the way it's been. Now, every time you get to a decision, because each quad is a decision, well, each line's a decision. That's the challenge, right? So it's getting so tight that every one of these lines are a decision. At least you have them. Like a conventional chart doesn't have these. These are all your main decisions. You just have to know what each one is, but it doesn't matter what they are really. They are all support and decision, support and resistance decisions. These are the lines that the machines are using. So you got to know that they're there. Your other indicators will confirm all this, but so you got to watch the videos in terms of making sure that you know where the quads are, right? The main quads. But really it comes down to, it gets to a support or resistance as a decision. Does it go above the line or below the line? And you go the direction that it goes. But every line, unfortunately, right now is a decision all the way through, right? Gets to the purple line, is it going to hold or is it going to go down? Well, it went down. Okay, it gets to the gray line, is it going to go up or down? Okay, well, it went down. Gets there, up or down. There, up or down. There, up or down. All the way through this, I can't tell you whether it's going up or down. All I can tell you is that the line's there, the decision's there, and the machines are going to make a choice at that point. It's really not the machines making a choice, it's the humans making a choice and the machines taking it to the next line. That's all that's happening. They just take it to the next line or the next decision more efficiently than humans do. But humans decide from line to line, is it going up or down, based on the trading. And then the machines just take it to the next decision for you. And that's why you see how aggressive oil can trade in between these lines, because who has this chart? Very few people. The developers for the large funds have this chart. We have the charting, but very few people out in the marketplace. You know, all the big oil traders that I know that are trading still as that aren't trading automated, let's put it that way, are trading conventional charting. So I hope that helps. If you're new to it, you got to get into those videos for sure. You got to watch them because this is not easy oil trade. Now, hopefully it's going to change. But where this stands right now, to give you an example, is you see it's testing this line here. Well, that's the top resistance of your down channel, right? So that would be your channel, the top of your channel, and this would be the bottom of your channel, and this would be mid-channel, right? So if it doesn't get through there and stay up there above this line, then you are in the down channel. It has to get up above this line and stay there to be in the up channel. The one problem is that because of the divergent nature of trade, it can also reverse on you lately, which we're not used to having happen. So there's all kinds of funky things happening, but think about what it would be like not having this. So once you get used to using it, yeah. Anyway, so I think to answer the question, I think down here earlier today when oil started to go, I had a target of, well, actually I think I had posted in one of my conversations online that I was looking at 47.75 or so. Oh, yeah, that was the midline. That's what it was. Yeah, there it is there. The reason why I was looking for that number is oil had come down, and I thought, well, when it bounces, its best scenario intraday was that it was going to get to the midline test, but it actually got to the outer wall of the quad. It tested up there. So yeah, that's the best I can do for you for oil. Talking about the red target on Friday. So how would I have known to short when target was hit? You wouldn't know. You only know at the test. If it goes up or down, you go up or down with it. That's all you know. So at that test point, see here's an example. Well, I was going to show you. Like here, these targets didn't hit, for example. Like these targets used to hit almost 100% of the time. I mean, they're coming close. That one just missed. This one was off. But last week it was a holiday week too, so the targets were funky on holiday weeks. But anyway, the point is that really what was tested here was, well, these are important horizontal fibs, right? But it tested up at that fib, came off, that fib came on, tested horizontal support and resistance, those purple lines. It fell off at the mid, and as soon as it's fallen off, well, that's a short until you get to this purple line, and then unfortunately you only have that much room, right? So it's a decision. So down there. So what our oil traders will tell you is that when it gets to mid quad, which is this area right here, the widest part of the quadrant. See your quadrant, it's shaped like a baseball field, right? So this is, call it home plate, first base, third base is over here, and second base is up top here. This is where the pitcher is. As soon as you get to the widest part of the quad, that's where your most potential is for volatility, because that gives the machines the widest area of trading range. So all the traders will tell you, once you get to mid quad, you got to be careful, and that's what happened here. It came off, and when you see it tanking or going straight up mid quad, you got a pretty good idea that you're in for volatility, and sure enough, right? So if you go through the epic charting, you'll see time and time again where mid quad is like where major volatility will happen. As you get to the end of the quad, not so much, but it depends too. Like there's so many different scenarios. But anyway, so mid quad, right? And boom. right at support. So unfortunately, it's the most complicated oil trading I've ever encountered myself in my whole career. But at least it's at least I got epic. So at least I have the support and resistance decisions. And if it just causes you to be more patient. So there is no reason for me to miss this trade long here, for example, because once it hits the quad support and it gets going above, some of these other tests, I should be long for sure. It's just that I was so rattled by that point that I was just like, get me out of it. So, I wasn't the only one. So yeah, that's the oil trade. So I'm going to do the rest of the review. I got half an hour to kill the rest of it here. Any questions for me on the oil trade, go ahead and just email anytime or DM me on Twitter. And after market hours, I can get back to you or we can chat or whatever. Okay, so let's get into the other charting. Bum, bum, bum. So I made a big error on my trading on Friday, like a really big error. So when Friday came, I identified properly a good setup in ARRY, ARRY. That was a disciplined play. My entry was a little late on Friday, so I paid a little bit more than I should have. But it's set up properly, right? This is the setup that we've been working through, and MACD is up on the daily, squeeze momentum's up, stock RSI is on its way up, volume was up, 20 through the 200, price above the 200, price action supports it, everything else. So definitely not a bad trade at all. In fact, a disciplined trade. So that trade I still like a lot. And then Snap. Now Snap is a little different in that it doesn't have the history for the 200 and a few other things, but MACD's up, squeeze momentum is decent. Stock RSI is on its way up, but it has the 20 about to breach the 50, price above. So it's definitely technically set up properly. It's not perfect, it's not AAA, but it's definitely an A setup. And so, that was my other entry. Now, here's where my error was. I was thinking because I was seeing such divergent activity in oil trade and how tight oil was getting, and I was seeing crazy town stuff in the S&P, and then the hurricanes and earthquakes and blah 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 blah. I thought, well, for sure, volatility must be on deck. Now, the other thing I took into consideration there was that there's a time price cycle end in the markets for almost everything that we deal with: oil, S&P, like all the big considerations in and around September 9th. Give it, a number of days on either side. So what happened was I actually assumed that it's bad. Time price cycles don't mean it's bad. Time price cycles just mean, that compression that's happening is going to end, and there's a high probability of it, and it's, they're going to go up or they're going to go down. Not necessarily that they're going to go down. Trader bias, right? And I assumed there's a high probability of stocks going down. Bad. Trader bias is very bad. So, when you're trading technically, that's very bad. Well, that couldn't have been further from the truth. And the S&P has had, crazy town breakout day. That's a big deal for the S&P. And of course, the TVIX volatility play that I took a pummeling. So the number one problem was the actual bias that I used. I was, trying to take out a little bit of insurance for my SNAP and my ARRY place. But really what happened was, the insurance cost me a fortune, but my bias is what really cost me. And then the next error was when my bias was wrong, I still didn't sell. I should have sold real early in the day. But I thought, okay, look, if they get it up over this resistance, which proved to be resistance, it struggled there, then I'll consider selling. Then it was like, okay, if it gets over the quad, well, it did. If it gets over here, well, it did. And then I'm like thinking to myself, well, this is the last bullish quad on this S&P chart. Once it gets in here, this is moderate stuff. Like, this is not bullish at all. Until you look at this little quad here, that's bullish. This is fairly bullish. And it's like, well, okay, this is getting into the 13th. Well, the 13th isn't that far away. In the meantime, TVIX can get just murdered. And then you get into here and it could go again. And I thought, well, damn. Because if you know the nature of TVIX or UVXY, those are very short-term plays. Because they always end up in zero, right? Eventually. They're just for insurance. Very, very short term at best, right? Very, very difficult to play those. It should be intraday, not held over a weekend normally. So all kinds of errors there, and a number of those errors, they just shouldn't happen. But, there's all kinds of buts, right? Looking in hindsight. So that's what happened in TVIX. So I took the hits and sold out. And wow, there's some big noise here. Oh, they're cleaning up after the hurricane. They'll be out of here soon. Okay, so the reality is I got pummeled there. Snap, I'm holding. I like the setup, and I'm staying. And technically, it's sound. ARRY, I like the setup. It's sound, and I'm staying. And technically, I'm fine there, and more than fine. I'm convinced it'll go. If it doesn't go, or Snap doesn't go, that's not a trader bias error. That's just simply, it just didn't happen according to the technicals. So that's what I wanted to cover with those. So I think you have a general idea of what happened with my error with volatility. Now, what's happening more, and the most important part of this is not kind of what happened, mistakes were, and what to learn from it. The most important thing is that what I'm seeing, I went through many more charts in the weekend than I went through a lot of the good traders that I know and what they're trading and what their P&Ls look like right now. And what I'm seeing, like, actually Corey is a great example. Corey has identified anomalies in trade, or hit a lot of really interesting anomaly type trades, right? Where there's a setup and he's hitting them. So the fundamentals and certain geopolitical things, certain things happening in the markets, et cetera, those type of plays the last month have been fairly decent. The technical plays, the problem with the technical plays right now, they're fine, but the problem with them is that they're rotating through them. So to get follow through in these technical plays is not easy. So you've got to play really, really tight. So your entries have to be right, your exits have to be right, and you have to be in the right place. If you're not in a technically sound setup, it better be an anomaly like what Corey's been playing, or like an IPO, for example. So there's some IPO players that have been doing very well lately. There's some fundamental guys that have been doing very well. I don't buy the the guys that are into the bottom plays or whatever, because the bottom plays, it's easy to make it look fine. Like you can, for 9 months, you can be saying, oh, whatever, corn is going up. And, 9 months later, corn starts going up and, saying, oh, see, I told you corn was going up. I don't buy that. Anybody can do that. Anybody can take something that's beaten down and, say it's going up, but eventually it's going to go up. So that's not what I'm talking about. I'm talking people and fundamentals like what Corey's doing, where it's very specific things, finding the anomalies, finding the edge, and playing them. That's been really good. Or the IPOs, and I don't completely buy the IPO methodology because I know the IPO business really well, but it's not just that. It's that, it's black or red. If you're hitting them, you're hitting them. If you're not hitting them, you're not hitting them. And sure, there's some fundamental in there, but not really much. After having been in that business and being one of the people that was in control of what happened to those stocks, I don't completely buy people that are hitting those. So, because, I know, there was no trader out there that could tell me what we were going to be doing with a stock, if you know what I mean. Like just by doing a fundamental study, it wasn't going to happen. So what's happening? So the moral of the story is that you either get anomalies, good solid anomalies like what Corey's been doing or other people have been doing, and capitalize on those, walking into those with the confidence that you know what's going on, or you trade technically but really tight and really super disciplined. I'm in the latter, and that's where I have to go with my trades. So you're going to see over the next while, and I'm going to be sending a note out to all the subscribers and all of our anybody that's involved with us is getting a note for me tonight. That's going to explain exactly what I'm going to do until these markets get to a state where they're not everything isn't coiling and they aren't rotating through the way that they're rotating through these asset classes, because this is not an easy market. When we came out of the election, easy market. We move into Q2, it tightened up a little bit, but still a nice market. We moved into Q3 and things have been changing fast. So, what's Q4 going to look like? I don't know, but all I know is that the only way for me to get a decent return that's predictable is through extreme discipline and only AAA setups. And then, of course, our models in certain instances. And then, of course, Bitcoin has been, or our crypto trading has been very predictable. So I'm going to just look at the charts on the day really quick and see how we made out there. And if anybody has any charts that you want to look at, or you want to, the team to have, you want to share with your team, go ahead and put them in. But I'm going to just see how the markets are faring here today. Specific movers. MRNS, I wanted to short that, and IB didn't have any borrows at the time. That really annoyed me. Timing was perfect. So on the daily, MRNS is way up. When I'm talking about discipline in terms of my technical trading, that's going to mean that, I take this trade where the 200 comes down and the 200 is getting over. Trades getting over the 200 and taking it very specifically long and exiting very specific short, or exiting, and then re-entering specific to the plan. So I could trade through this based on a system that I've detailed on our videos, and then eventually you get grip. You might have 3 or 4 or 5 tiny paper cuts in here, or you'd probably end up even if you use the system properly, and then you're good to go up in here and you get the benefit of it. But now it's too late. That's way too far gone for absolute discipline. Tahoe, that's a bottom play, and not the type of bottom play that I'll get involved in right now. Not that it's bad, it's just not something I would look at right now. Remark Holdings, so Mark, over its 200. And so I would have to study out the chart. I can already tell you without studying out the chart, it doesn't respect its 200 at all. So it's just not something I would look at. I have too many others that are set up properly to look at stuff that's not. HRTG is a bottom play and just not something I would look at right now. So you'll find that I'll get really, really selective now. TEVA, definitely not something that's set up in the way that I need right now. GDS over its 200, but it hasn't got the chart history, so there's no way I can look at that one. RDRA just doesn't respect it. Yeah, it's a pharmaceutical. It trades like one too. So nope. HCI. And by the way, I've talked to a lot of traders last week or two that are completely getting choppy and chopped in this, and a lot of them are just sitting back watching. So that's a bottom play that I just wouldn't look at. ACTX. There again, another bottom play that I wouldn't look at. GTXI, up over its 200. This one isn't so bad. It's not great, but it's not bad. The problem is it's too far extended now. Even before it was, it doesn't really respect the 200, but. So unfortunately, for the next little while, I'm just going to get into really, really clean charts. So the ones that you see me take entries in, that's the way they're going to be. This one's too far gone now. It's a trending stock. I already can tell you that SAEX is not something I would get involved in. FNHC, bad. Well, it wouldn't work for me. VERI, we've been all over this one. And a week or two ago, I would have considered taking something that extended, but not now. SUM under the 200, not a setup I need right now. United Insurance has got it regained its 200, but does it respect its 200? It might, but it's a pretty flat stock. In other words, trying to get return out of that would be very difficult. Anyway, not my type of deal. I think you can see what I mean by the rotation that's happening. Like if you go back in these middays and you look at the last 30 days, that's another thing. Like, you know, like in oil where we would get a trend for a number of days or weeks going up or down and it became predictable. Same thing with these middays, we would get, you know, the same ones would rotate through here, the same kind of setups, the same kind of, you know, sectors or whatever would rotate through, and it was pretty predictable. You know, these we haven't seen these. Like these are all new, right? So it's a constant rotation, and getting a hold of it's very difficult. So the only way you can get a hold of it is to trade the real good ones, and just know that you're not going to have a challenge if it, you know, comes under pressure. Bottom play, you know, that's a red or black. SMMT, that's a trending stock. Does it hold its gains when it gets a pop? No. Does it have the history? No. Does it respect its 200? Kind of. You know, and that's the list. And that's kind of what I expected today, because it just is not, it just isn't the market. HIIQ, way off. I mean, that was a fantastic stock, fantastic play. And look at what happened. What was the news on this? It'd be interesting going back to that. Wonder if it hit that target I had. That's really interesting. I'm really curious to see how it moves through the target or through the model. So I'm going to bring it up real quick. So yeah, right now you either got you got to play the anomalies, or you got to play the technicals really tight, or the IPOs. I guess there'd be some people playing the bottoms. I mean, you can play all your categories. You just got to play them super smart. Kind of, I guess, the best way to explain it. I want to see how this moved through the model. This was just an on-the-fly model. It wasn't real built out. So I can't stress enough in the markets right now to get like radically disciplined. So that's interesting. So it did trade well inside of it until it got here, and then it got mid quad, because if the if the quads were drawn at the top, that'd be mid quad. Then it bounced off it. Oh yeah, so it got into the apex. It went after the apex, and then it fell right through. Very interesting. Hmm. And I don't even know what the news is, but I find it really curious that it went right for the apex and fell off. Coincidence? Hmm. So that's HIIQ. Come on now. Charts are a little slow here. TWMC, ACHN. Wow, that's a big sell-off. PLSE. Wow, MUX. ADOM, well, that's not unusual. It's got lots of volatility. SHOS is in there too. I thought they were going to start to maybe get off the ground. So MUX is having a hard time getting its 200. Not that it really matters for this type of stock, but so this is November 2016, August 2017, so almost a year. Yeah. Well, anyway, so that's those are the charts on the day. I'm just going to take a look at what's going on in the market again here real quick. So ARRY unfortunately has come off, but I'm holding it. Technically have solid reason to do so. SNAP holding it, technically have solid reason. US oil, it's probably going to get up in here, and So 48.10-ish. 48, oh no. What? Sorry, 49.25 or so. 49.20 to 25. It's trading 48.10, 48.15. Yep. Volatility, did it continue under pressure? Yeah. S&P. So the S&P is up through that bullish quad into the next test. And my suspicion is, if I had to guess now, it will not do a lot. Yeah. Okay. So anybody want to share any charts or have me look at any? Looks pretty quiet. Leanne, I seen on your Twitter feed you were looking at a few possible entries today. Did you take any there? Is Leanne still in the room? Maybe she's not even in the room. Doesn't look like it. Looks pretty quiet. Leanne, she's still signed in. Oh, yeah. So anyway, that's the markets. Gonna have to be super disciplined. I got a number of the swings out last night. The rest of them will be out tonight. Yeah, that's it really. We were going to put them out last night, and then we thought, well, we'll see what happens with the markets today. They're actually ready. It's just a matter of publishing. So I'll get those out tonight, and then it's just absolute discipline setups from here forward until the markets kind of settle into some predictability. Looks like we're good to go. So that's it for midday. I'm going to reset the oil room right now, and then I'm going to probably take the afternoon off. We'll see how things go. Talk to you soon.